If the U.S. Congress does nothing, taxes, your taxes, my taxes, everybody in America's taxes jump up $5 trillion over the next 10 years. That's $500 billion each year into the future. And by the way, that goes in through eternity, forever, on and on. But the House has acted to say no, to cut $5 trillion in taxes so that that doesn't happen. And we maintain the lower rates that we have today. If we do nothing, by the way, the Senate hasn't. That's why we're here. I'm talking to you. Because the House has passed it, the Senate hasn't. The President says he wants to sign it. But now we need to make sure that the Senate gets it passed, the House and the Senate get together, and with the President, by July 4th, we get this tax bill passed so that taxes don't go up on anybody, and there are even some more tax reduction that President Trump has come forward with. So what are we avoiding? The tax cut, the tax increase that will happen. If the Democrats get their way, they all voted against the tax cut. If the House Democrats got their way, your per-child tax credit of $2,000 goes to $1,000. It's cut in half forever. And the doubling of the standard deduction, which meant 90% of us don't have to, do all the paperwork when we file our taxes, because the personal exemption, personal standard deduction, is larger than any of the deductions we could have carried and all the contributions to church and other things. Not enough if Congress doesn't get this bill passed, if the Senate doesn't move forward. They're tax cuts that create economic growth, that allow expensing for new business investment. They're tax reductions for smaller businesses. If nothing happens, everybody listen, if you paid income taxes last year, if you're going to pay income taxes this year, your rate goes up. Whether you make a lot of money, a little money, middle amount of money, your rate goes up on everyone if this tax bill isn't passed. And that's why when the Democrats vote against it, just remind them, if you run into them on the street, you are raising my tax rates on everyone. They lied about this back 7 years ago. The Democrats said, it's only for rich people. And the Washington Post and the New York Times and all the establishment press had to write headlines saying, no, everybody got a tax cut. Every group, rich, poor, middle, businessmen, pass-through, small businesses, everybody got reductions in their tax rates. And they're all going up if nothing is done. So what happens? In the next few days, the Senate will begin to act. Hopefully they'll pass something very much like what the House passed. And they've been talking for 2 years. They've been working together. So we think this is going to happen. This is a cheerful comment here. I think we're going to get this tax cut that stops the tax increase and actually reduces taxes. The President has asked for, and the House has put into their bill, no taxes on tips. Now, if you're a bartender or you work at a restaurant as a waiter, a waitress, or you do somebody's nails, or you get your hair cut, you do haircuts, you beautician, you drive for Uber or Lyft or any one of the delivery systems, a lot of tips there. They won't be taxed. That's in the bill. They're also looking to reduce taxes on people with Social Security and on people who get paid overtime when you work extra hours. Now, if this bill passes, there are two other good pieces of news. There are going to be two more reconciliation packages. That's what this bill is. This is a bill that the Democrats can't filibuster. Normally, it takes 60 votes to do something. And the Democrats have enough votes, they could say no, and would say no to any continuing the Trump tax cut. That's what they're all opposed to him. There isn't a single Democrat who says, I support the Trump tax cut. They're all voting no, and they will in the Senate as well, unfortunately. But there's a Republican majority in the House, very narrow, and a Republican majority in the Senate, very narrow. But those together can make these tax cuts permanent. And once that happens, here's the good news. There are two more bites at this apple. There are two more buses coming by. In the fall, November, December, there's another bill where all you need is a simple majority, meaning the Republicans can cut taxes again. What are people talking about? And this is where I'd like some of your advice. If you could leave a comment below this, let us know what tax cut ideas you've heard being discussed that aren't yet in the bill. I can tell you some that I've heard. One is called the Growth Act, which says if you're one of 33 million Americans who has a mutual fund, you end up paying taxes on the mutual fund every time stocks go up during the year inside that mutual fund, that savings for your retirement, right? You pay tax, you don't get the money, but every time that the value of the stock goes up inside your mutual fund, you pay capital gains taxes. And then when you get it out, when you retire, there's less in it. This bill says, no. While you're saving during your working life in a mutual fund, no tax on your capital gains. When you take the money out, you pay one tax on the whole capital gains. But that means you've built up a lot more savings during your lifetime. I like that idea. It doesn't cost the government very much money, but it makes it easier for you, your family, your kids, your parents to save for the future. There's another one. If you know anybody who's ever worked overseas, America does. Usually when you hear about something truly stupid, it's the French again, okay? But here's one of the things America does that's dumber than everybody else. America and Eritrea, which is a real country, I'm told, okay? America and Eritrea. We say if you're an American, you work in France, you pay French taxes on what you earned in France. But you also pay American taxes, even though during that entire year, you were in France. All other countries, if a French person works in America, he pays American taxes during that year. But he doesn't pay French taxes because he's been in America. He pays American tax, not French tax. We tax you twice. That means that a lot of times when there are jobs that are available overseas in construction or engineering or mining or all sorts of cool stuff that Americans do better than everybody else, and we get hired overseas, it's more expensive to hire an American. So they hire a German because he doesn't have to pay taxes twice. We lose jobs in the international world because of that policy. There's a bill to say no more of that. It almost went in the last Trump tax cut, and they may do that. So there are a number of really good ideas. We may want to take tax rates down further. Maybe, and this is one of my favorites, how about we don't tax inflation when we tax capital gains, the value of your house when it goes up? If your house is worth a lot more than it used to be because 20% of that gain was a couple of years under Biden, you're paying taxes on Biden's inflation. That's nonsense. And if you hold something like stocks or, for 20 years and inflation was only 2%, well, in 20 years, that's a 40% of your gain. It's inflation. And so when you sell that, whether it's your small business that you put all the work into, and then when you go to retire, you sell the small business to some young entrepreneur or some big business that likes what you've been doing, you want the government to tax all the inflation that happened during your lifetime and take that money as if that was something that you got, okay? So there is an effort to say we're not going to tax inflation on capital gains. I love that idea. If you like it, do leave a comment under here and let people know, because I want to be able to tell congressmen and senators of the level of support that we have for that. We have a real opportunity to take all the good stuff that's happening right now and then add to it once in the fall and once next spring. 3 different tax cuts. And we're only at the first one. Looking good.